Hello, and welcome to this week's special presentation entitled, How to Find Blue Chip Stocks at Bargain Prices. My name is Glenn Tompkins, Senior Stock Market Strategist for VectorVest, and it's my pleasure to be here and my pleasure to bring this video to you. The beautiful thing I like about tonight's special presentation is the sheer simplicity of what I'm about to show. But let's start off with, what is a blue chip stock? A blue chip stock is a stock issued by a large, well-established, financially sound company with an excellent reputation. Normally, such companies have operated for many years, have dependable earnings, and usually pay dividends to investors. Holy smokes, that sounds like a great company to be in, right? And not only that, now that you know what a blue chip stock is, but how about being able to buy them at a bargain price to take advantage of its move to the upside? Well, why is it so important to be in blue chip stocks? Basically, for stability. Most investors understand that blue chip stocks have stable earnings. During an economic downturn, investors may turn to these perceived safe havens because of their steady nature. Some people believe that blue chip companies can offer security during periods of slower growth due to their experienced executive teams combined with their ability to generate stable profits. This just sounds better and better the more you understand what a blue chip stock is all about. So we're going to take the next step and jump into the VectorVest software. Remember, I told you that this was going to be really based on simplicity. So we can clearly see as I record this video, all of the major indices are up today. Looking at the color guard, a lot of yellow. Primary wave is up. Confirmed call is still down. Green light showing up in the price column. So there's a lot of bullish momentum going into the market. But we also know that as the market fell, and let's go to the market timing graph real quick. When the market fell, because of earnings numbers, the market fell, put this on a 3-month graph, and there was a debacle, the market fell. But now as we fall, and a lot of those big name blue chip stocks were affected adversely. Many of them still held their own in that pullback, but because of what they are, who they are, people felt compelled to want to try to hold on to those stocks or got scared out of those stocks and now are looking for better entries to get back into those stocks. So after that, the market started to rebound. And during this rebound period, these stocks that have gotten beaten up may be presenting good early buying opportunities now before the market continues to move higher. As I look at our indicators, the MTI, let's scroll down a little bit, right at 1. So the underlying trend of the market is coming into the fray. The buy to sell ratio is rising as the market is rising. More stocks slowly but surely are becoming buy recommendations as the market is rising. RT is moving higher. We're not above 1 yet on either RT or the buy to sell ratio, but we're getting close. The stocks that got adversely hit during this downturn should be starting to rebound. And if we know the quality of what makes up a blue chip stock, why not try to get into these stocks now on an early move? All right, so the power of the VectorVest software gives you the ability to hone in on blue chip stocks with just a simple click of the mouse. Let's go to the unit search tool. And where do we find these stocks? Well, if the market is starting to rise and coming off of a perceived bottom, I'm going to go and scroll down to searches bottom fishing. As I click there, we'll see a lot of different bottom fishing searches. Depending on how you invest in the market, there's a bottom fishing search ideally suited for you. But notice at the top of the list, we've got 1, 2, 3, 4 searches ideally suited to big name stocks, whether it's blue chip bargains or best of the biggies, of which we're going to go through in a moment to show you the differences behind finding these high quality stocks that have been around a long time that maybe pay a dividend. All of the qualities that we just discussed in regards to blue chip stocks can be found within these first 4 searches in this group. Let's start with blue chip bargains. All right, blue chip bargains And you'll see with these three searches, blue chip bargains, VST/RT, blue chip bargains, high average volume, they all come from a stock watch list that we have for you called Blue Chip Bargains. Remember I told you about the power of the software? We do the work, you reap the rewards. We will maintain a list of stocks that are blue chip bargains for you. Now, what do we do with this? Well, price is greater than $1, average volume greater than 100,000 shares, stock exchange not equal to these exchanges, and stock watch list not equal to contra ETFs. The biggest thing about this is it's sorted by RT ascending. The stocks in this list that have been beaten up the most. All right, and you know what happened with CrowdStrike, with the blip, the whole 9 yards. But a lot of these stocks, if we scroll over a little bit, a lot of these stocks are fundamentally sound. Relative value above 1, relative safety above 1. But look at RT. These stocks have been beaten up. And now if the market is pulling stocks higher, these RTs should start to rise. Look at the majority of these CIs above 1 as well. Chipotle split, the stock fell. SMCI got hit due to all the tech stocks getting hit. McKesson, Packard canceled. Man, just stock after stock after stock. But it's out of that watch list sorted by RT ascending. Let's go look at Blue Chip Bargains VST/RT. I'm going to run that. High VST stocks with low RTs. Again, the same kind of scenario where these stocks have been beaten up by relative timing, but if the market's move is moving higher, these are still high quality stocks. Even though these stocks have gone down in price, these stocks are still fundamentally sound, and that's what makes them blue chip stocks. Nothing has changed except for the price got hit because of geopolitical, all kinds of stuff. All kinds of stuff. Nonetheless, they went down, but why do people come back to these stocks? Because they're good quality stocks. All right, let's go look at Blue Chip Bargains, high average volume. Let's run that real quick. And now these are just still from the Blue Chip Bargains, but sorted by average volume. Now these are the stocks that everybody's trading that are still fundamentally sound. So 3 different ways to look at that same watch list that have been beaten up, that you have the opportunity to get in on good bargain prices. All right, let's go graph these. Let's just graph these. I like this. What am I looking for? Well, let's go change the graph layout to VectorVest Simple. Again, I like simplicity. NVIDIA. And a lot of people missed out on the opportunity to get into NVIDIA when it was rocking and rolling. Do you want to be stuck in that same camp going into now? Look at this. The stock fell. It's rebounding. Early prices, early bargain prices rather than waiting for it to hit the high. Look at the earnings per share. RT is now above 1. Gotta love that. Next one, Amazon. Beautiful upturn. Got hit hard. Now rebounding. RT not above 1 yet, but earnings per share looks beautiful. Next one, Google. Now, I noticed that these stocks that are rebounding, I probably want to pay attention to RT going above 1 to let me know I've got a little bit more confidence that the stock is in an uptrend. But the earnings per share on these stocks are amazing. And again, they're fundamentally sound. Microsoft coming off of that low, moving higher. RT not above 1 yet, but look at that earnings per share. Remember, earnings is the engine that drives the stock's price higher. Here's another one, TSM, bottom left, top right, got hit. Moving up, RT above 1, love the earnings. Let's go to the next one. Google, moving up off of this low, beautiful equity curve prior to that. Look at the pullback. Earnings looks great, RT not above 1. So I'm looking for, there's another one, Walmart. Bottom left, top right, new high. RT is above 1, earnings per share growing. This, folks, is how you find high quality blue chip stocks. But you know something? I like looking for that RT above 1 to give me more of a standing. There's another one, Meta. RT is above 1. All of these earnings are all outstanding. All of these earnings. And here's NE, an electric company utility, moving up. Earnings took a little dip, but still higher than it was a year ago, and RT above 1. Let's go look at one more search. Now, this one I specifically like, the best of the biggie /RT. Why? I'm going to run this. This has more in it outside of just the watch list. All right. Notice no watch list here. Okay. Relative value above 1. Relative safety greater than or equal to 1. So fundamentally sound. All right. Fundamentally sound once again. How about this? Earnings growth rate. If earnings is the engine that drives a stock's price higher, how about looking at the growth rate of earnings? Greater than 10%. And big market capitalization greater than 500 million. That's what? I believe that is, if my math is right. Nonetheless, big market cap stocks. Let's graph these. So again, this one is not looking at the watch list, but I like this based upon, what we're all about. We want safe, undervalued stocks rising in price in a rising market. Let's go see how much undervalued. If so, let's go move value over to, move this over. I'm going to do this real quick. Move this over to price. There we go. Let's go call this fairly valued, slightly overvalued, undervalued, overvalued, overvalued, overvalued. So even though we are still looking for our mantra of safe, undervalued stocks rising in price, I think that looking at the big blue chip stocks for the most part, I think is still a great way, even though some of these stocks may be overvalued. That just means people are willing to pay a premium to own. But these stocks are safe and they are rising in price. Or are they? RT ascending. Again, looking for RT, looking for the stocks that have been beaten up the most. So maybe not rising in price right now, but the market's direction should pull these stocks higher. All right, let's go graph these all real quick. These are going to look a little tougher, right? Been beaten up a lot. Celsius, love the earnings per share. RT is not there yet. It is slowly rebounding. Let's go see if we can find a different one. Here's Dexcom. Love the fading of the gap. Still RT below 1. I do like the earnings per share. Let's go see if we can find Dell. Nice rebound. Look at that. Still RT not above 1. Could you still take this? The answer to that question is yes. But man, I would really like for RT to bona fide justify that. CCJ, earnings higher than it was a year ago. Look at all of these stocks are rebounding. Coming off the pullback, still moving up in price. Earnings per share looks good. Man, even though I like this listing of stocks, I would still prefer to have some of these stocks with RTs above 1. But I look at the quality of these stocks. Some of these stocks, maybe not as beautiful as some of the other stocks. And maybe you look at that and go, man, I don't think I want that one. We got 4 ways to find you some stocks to take advantage of that are great quality stocks, fundamentally sound, beaten up, but have the ability to go get them in at lower prices. Told you it was going to be simple. That's it. That's it in a nutshell. I love the ability to look at them at a click of a mouse to help me to make the decision. Folks, I think you could build a beautiful portfolio of stocks based on these 4 different searches. Once again, folks, my name is Glenn Tompkins. It's my pleasure to have presented this to you. Hopefully it opened up some doors, turned on some lights for many of you, especially if you're brand new to the market. A great way to jump on board as the market is starting to move now. So with that being said, folks, have a great evening. See you the next time I see you.